Hi, welcome to the Crypto Republic. If you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video and subscribe. Hello, XRP Army, and welcome back. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the biggest move in XRP's future has nothing to do with hype and everything to do with strategy? Because when most people look at XRP, the anointed one, they focus on the chart. They focus on candles, price targets, social media, hype, and emotional reactions. But what if the real story is happening behind the scenes through liquidity, management, supply, control, institutional behavior, and long-term positioning? Now, before we go any further, I need to make something very clear. As always, this video is not financial advice, and nothing here guarantees XRP will ever reach $100. This is simply my personal opinion and a long-term market thesis based on years of studying crypto markets, liquidity cycles, and Ripple's business structure. And honestly, I think most people are looking at XRP completely the wrong way. I previously sold all of my XRP at an average price of $2.30 because I believed the market was overheated after the token briefly pushed close to $3. At the time, I expected a correction, and eventually that correction came. During the pullback, I bought XRP, the anointed one, again at $1.13 lows. And members inside our community already know I talked about that move when it happened. But here's where things get extremely interesting and spicy. Most retail investors only focus on price. Institutions focus on structure. And Ripple operates more like a corporation managing a long-term financial asset than a typical crypto project trying to chase hype circles. Let this sink in, ladies and gentlemen. It's very, very important. No one pays attention to this. That distinction matters because Ripple's funds part of its operation through monthly XRP sales. That money helps support development, partnerships, infrastructure, and the expansion of the XRP ecosystem. A lot of people hear that and immediately panic. But the larger corporations manage assets all the time. The difference is blockchain is transparent. You can actually track much of what's happening, and that's one of the reasons XRP has always fascinated me. Real quick, if the kind of analysis you just heard is valuable to you, I want to let you know about something. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all this, come and join for over 550 active traders and investors in the Patreon, the Crypto Republic Desk monthly community. And welcome to all the new members joining us. Ladies and gentlemen, it's all about being prepared for what's coming. And being a financial mercenary is about getting ahead for ourselves and our families. Click the link in the pinned comment below. Now let's get back to the data. I first became interested in XRP back in 2017, long before most people understood what Ripple was trying to build. At the time, crypto was still immature, but Ripple was already pursuing enterprise partnerships and blockchain infrastructure in a way that felt very different from the rest of the market. Then came the SEC lawsuit, and regardless of where people stand on Ripple, there's no denying the lawsuit changed everything for XRP. Liquidity disappeared, price collapsed, retail confidence got destroyed and cut up like sushi. And a lot of investors got trapped because they didn't fully understand how liquidity works during crisis periods. During that time, my associates and I relied heavily on decentralized exchanges, cold storage, and liquidity management strategies to navigate the volatility. That experience taught me and us something very important. Most retail investors don't lose because they picked the wrong asset. They lose because they don't understand how markets behave during stress. And XRP, the anointed one, has gone through some of the most aggressive shakeouts I've ever seen in my financial career. I've spent years monitoring whale wallets and watching activity among the XRP ledger's top 100 holders. At one point, my company was ranked among the top 50 holders. And after watching those close cycles closely, I started noticing a pattern. XRP doesn't always move like Bitcoin. Bitcoin often climbs steadily over time. And XRP tends to move violently. Sharp rallies, aggressive corrections, huge emotional swings. And in my opinion, A lot of that volatility is connected to liquidity events and market shakeouts designed to remove weak hands. Now, again, this is speculation and personal analysis, not a statement of fact. But if you've been in crypto long enough, you know that large market participants have tools and strategies that retail investors simply do not have access to. Sophisticated traders can spread orders across multiple wallets. They can hide liquidity. They can coordinate entries and exits more efficiently. And retail traders often react emotionally right when those moves happen. So that's why so many people get shaken out near bottoms and buy back in near tops. And honestly, XRP has historically been one of the most emotionally difficult assets for retail investors to hold. But here's the part almost nobody talks about: supply. Because if you want to understand the long-term XRP thesis, you need to understand Ripple's escrow structure. This is very important, ladies and gentlemen. Write this down. There's been a lot of confusion online about Ripple relocking 700 million XRP. But in reality, this is part of Ripple's standard escrow process. Roughly 1 billion XRP is unlocked every month. However, Ripple does not necessarily sell all of it. That depends entirely on market demand and liquidity conditions. In stronger markets, there may be enough demand to absorb larger scales. In weaker markets, sales are naturally more limited, and that creates an interesting cycle because XRP's circulating supply dynamics constantly shift depending on market conditions. Now, here's where my long-term theory becomes controversial. I believe there's a possibility Ripple could eventually increase strategic token burns over time. Not tomorrow, not next week, and not because someone on social media says so. I'm talking about a long-term horizon, potentially over the next 10 years. Let that sink in. And if something like that ever happened at scale, it could dramatically change the supply side of the equation. Now, to be clear, Ripple already burns small amounts of XRP through transaction fees. That part is factual. What becomes speculative is whether large strategic burns could ever happen in the future. And if that did happen, timing would matter enormously because major supply reductions can tend to have the biggest psychological impact when retail participation and media attention are already elevated. Think about how stock buybacks work in traditional finance for a second. Write that down. Companies reduce available shares. Scarcity increases. Investor psychology changes. Now, obviously, XRP is not a stock, and this comparison is only meant as a broad example of supply dynamics. But the principle of scarcity influencing valuation is something markets have always responded to. And this is why I think so many people underestimate XRP. They're only watching the price chart. They're not studying the structure behind the asset. They're not studying liquidity behavior. They're not studying supply mechanics. They're not watching institutional position. And whether people agree or disagree with Ripple, the company has consistently operated with a much more corporate-style strategy than crypto projects. That matters, especially long-term. Now, I do not know whether XRP will actually hit $100. No, nobody knows that. And anyone telling you that they can guarantee a future crypto price is someone you should be extremely careful listening to. But can I see a long-term scenario where supply reduction institutionally, adoption, liquidity expansion, and stronger infrastructure combine to create dramatically higher valuations over time? Yes, I absolutely can. And I think that's the conversation serious investors should be having. Not emotional moonboy hype, not unrealistic overnight promises, but long-term structural analysis. Because markets are built on narratives, ladies and gentlemen. They're built on liquidity and they're built on psychology. This is really important. No one pays attention to this. I understand why, but write those three things down. And XRP sits at that intersection of all three. Before we move on, I want to do a quick check-in. If you're here finding value in this video so far, please take a moment to hit the like button. It significantly helps the channel reach more people. I'd also love to hear your perspective on XRP's long-term supply dynamics and whether you think institutional adoption could play a bigger role in the future. Please share your thoughts in the comments below. If you'd like to see more content like this, Be sure to subscribe and feel free to share this video with a colleague or friend who might benefit from it. All right, let's get back into this dissection more. One thing I've learned in the crypto space is that markets are designed to test conviction. Most people enter during excitement. Very few survive the volatility. And XRP has tested investors repeatedly over the years. That's why I always tell people to separate emotion from strategy. Because when you see and study XRP historically, you notice something extremely interesting. The biggest emotional moments often happen near major turning points. Fear spikes near bottoms. Euphoria spikes near tops. And most retail investors react emotionally instead of strategically. That's why I believe understanding liquidity is one of the most important skills in crypto. Not hype, not influencers, not social media narratives. Liquidity, because liquidity determines whether price movements can sustain themselves. And XRP's liquidity structure has always been unique due to Ripple's involvement, escrow releases, and institutional positioning. Again, none of this guarantees future prices, but understanding the mechanics gives you a completely different perspective than simply chasing green candles on a chart. And honestly, that's why I think the XRP conversation has become so divided online and even in boardrooms. Some people only see manipulation. Others see long-term infrastructure potential. Personally, I think the truth is probably somewhere in the middle. Markets are emotional. Large players exist. Liquidity matters. And long-term strategy matters. That's true in crypto, stocks, commodities, almost every single financial market, which is why I continue paying attention to XRP despite all the volatility. Because whether people love it or hate it, XRP continues to remain one of the most discussed digital assets in the world, and assets that continue attracting attention for years, usually do for a reason. Now again, I want to emphasize this clearly for YouTube compliance and transparency. Nothing in this video is a guarantee of future performance. This is a personal market analysis and opinion-based commentary. Crypto remains highly volatile and risky, and every investor should do their own research before making any investment decisions. But ladies and gentlemen, when I take a step back and I look at XRP from a long-term perspective, especially through the lens of supply, liquidity, infrastructure, and institutional behavior, I believe the asset still has one of the most interesting setups in the crypto space. Whether that eventually leads to XRP reaching $100 or not, time will decide. But I do believe the next decade could look very different from the last one. If you made it to the end of this video, thank you for watching. Your being here shows that you're truly invested in revolutionary tech. If you haven't already, please hit the subscribe button and turn on notifications so we can continue to grow and learn together. If you gained something valuable today, leave a like and let me know your biggest takeaway in the comment section. Finally, please share this with someone in your network who could use this information. Thank you again for your time, and I will see you in the next one. This content is for informational and entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. I'll see you in the front lines. Don't get caught up like sushi. Keep the Gucci conviction and the Gucci clarity.